Ladies and gentlemen, welcome to the Big Tech Frenzy. First off, I think that maybe we should talk about the changes in some stock prices. And in fact, I think that we should also start with some Robinhood stock because boy, oh boy, did we pass an important milestone. Not only was today the first day that we actually closed above $100 per share, but it was actually $103 a share, even climbing even higher than this in overnight market or after markets, and then even further into overnight markets at $103.60. Okay. SoFi also had a decent day, up 2%. Little bit of red in overnight markets, but that's not to be concerned. We're still above $21 a share and have been holding that for quite a little, or for quite a bit now. I was gonna say quite a little bit because it's not like, don't think months here. I mean, it's been a couple days, but let's enjoy it. Okay, these are good places to be hanging out at, making sure that shorts have to pay their way to either continue to short SoFi stock, or they can end up dropping their positions, losing their money on those deals, and then obviously they'll be forced to purchase back that stock, which brings us to potentially a higher area. Okay. It is exciting to sort of look at, SoFi. I think the last time we checked, SoFi was at a 14% short interest of total outstanding shares. Let's take a look really quickly. Short interest as a percentage of total outstanding shares was last updated June 13th at 13.4%. Okay. If you look at the daily volume, it's actually gone above, or not daily volume. If you look at the daily updated charts, I think it's gone above 14%, but I think that's more Fintel data. Anyway, I'm 100% okay with trading sideways until earnings results. Well, that I think we're going to learn a lot more information. Remember what happens, right? Right now, we're very much in a quiet period. So leading up into companies' earnings results, companies are required to essentially not put out new information. They don't want to make large adjustments to what is happening in the stock right before having some earnings that might go, bring it up or down. SoFi is expected to do an unbelievable quarter. Even the more bearish assumptions on the quarter are still saying that we're going to get roughly about 6 or 7 cents of EPS, all north of 30% year-over-year growth rates. I'm actually very, very close to 40% year-over-year growth rates. Most are on the upper bound, 30 plus percentages. Some analysts actually saying 40%. That's perfectly great to see. Now, some of that is weaker comps from Q2 of 2024, okay, whenever you're talking about year-over-year growth. But it's still important to know that quarter over quarter, we're still growing, okay? In every single industry, we're expecting growth: technology, platform, lending, and financial services. And, hopefully that will lead the stock to continue its climb up even after earnings. Now, we don't always see that from earnings from SoFi. Sometimes there is a sell-off even after posting some unbelievable earnings. The stock is very selective about what they determine to be the bear case, right? Like if, for example, they end up growing their provisions for credit losses, then a bunch of bears will attack that and say, oh, they're preparing for the worst, and they're going to see larger losses in personal loans or something along these lines. Then in the next breath, if something happens with the technology platform and they lose a large customer, well, then that's all the hubbub, is that, it was all about the technology platform the whole time, and that's what gives SoFi its multiple. So whenever it's a bank and it's most useful to be a bank, they're a bank. Whenever it's a technology platform, it's most useful that they are a technology platform for the sell side short analysts. Now, another thing that we've seen over the last couple of quarters from SoFi is that they've shown off not new product updates throughout the quarters like what we see from other companies, but they have actually talked about their future product announcements during earnings results. Noto has been the one specifically to break the news about Cash Coach, about level 1 options and crypto coming by the end of the year, interest-only student loans, interest-only personal loans. These are all products that we've learned about during earnings calls. Okay. This is a very big quarter. So we've heard a lot about the technology platform seeing more companies like enter into production, that maybe we'll hear something about that there's been a significant ramp up in the last 3 months, that we've seen SoFi Insider is this individual on X that sometimes goes through the app data to see, or the app code to see what they've been putting into their actual like release, what do you call it, versions of the app. And just recently, SoFi for the first time has mentioned level 1 options starting to appear in the app code update. So things like, hold on a sec, things that you can see like this, that in the code it actually says option settings screen widget level 1, covered calls, cash secured puts. So they are definitely working on this. The expectation is that it comes out before the end of the year. Okay. Now, that's a wide spectrum still. We're in July. So is it coming out in September, October? I mean, that makes a big difference than dropping right before, the end of the year, like late December or something like this. Once we start getting more of a full package for what SoFi Invest is, maybe that leads to stickier users, right? Maybe that leads to users that can put more of their assets on the platform rather than other areas because they've simply been waiting for those tools to appear, right? I don't do a lot of complex options trading. I now do level 1 options, doing covered calls, cash secured puts. So for me, SoFi would not be the first choice that I think of as a brokerage because they lack the tools that I need as an investor. So I wouldn't use them. If they ended up bringing out level 1 options, I'd feel perfectly comfortable being on the platform because they would have what I want, and knowing SoFi, it's going to be at a very, very affordable price, and that as they roll out more options, it'll be at good pricing and hopefully user-friendly interfaces. Now, there's some other things that SoFi Investor also pointed out. Let's give credit where credit is due for the SoFi Insider X page, that they also found what they're calling mysterious image called demo image appeared in the latest app code, where it kind of looks like this. They had alluded to maybe this being part of a SoFi like black card, because they were talking about having unlimited, maybe it's in the replies that we can see. No, maybe not. But yes, essentially what Steve Smith here says is more along the lines of what I'm believing. This looks like connecting external accounts, nothing too crazy. Maybe it's a cash coach feature, maybe it's a relay feature. I'm not too worried about this mysterious image, but they were under the impression in other tweets that potentially SoFi might be getting into higher end cards that have no credit limits, and that maybe that's where we see the Independence card with the 5% cash back. Who knows? At the time, whenever they talked about the Independence card, there was no annual fee. Maybe they come out with something that might have an annual fee plus really high 5% cash back working into SoFi Invest. Who knows? Who knows? But yeah, I think a lot of people. So I was talking with Stephen Fiorillo, and Stephen Fiorillo is someone that gets a credit card and doesn't care to change it all too often. He said if SoFi gets an Independence card, he will switch to that immediately because he understands the idea of just building wealth over time. He understands the S&P 500 compounds at a great rate, and there's not many better wealth, building asset classes or tools than just the S&P 500 itself. So if you can raise your cash back from, a lot of people are still on 1% or 2%, 3%, what have you. 5% is a completely different league. Now, it doesn't come with all the travel rewards and all of these things, but what would you rather prefer, to build points at a lower percentage back, or 5% cash back that goes directly into an invested but potentially locked in fund? Now, they didn't actually claim that it was a locked in fund. They only said that it would go into an index fund of your choosing, either a crypto sort of bundle of products, or the S&P 500, or even what was it, like a treasury, what's the word for the asset class, like a money market fund. That's it, like a money market fund, which is essentially cash with maybe a potential small amount of interest that builds over time as well, treasuries and stuff like this. one of these times SoFi won't fall after earnings. Need to get these shorts out. Yeah, I mean, it definitely could be this quarter. I think that although long-term investors of SoFi completely understand that GAAP versus non-GAAP is not always important for SoFi, that if there are one-time charge-offs and everything, that we didn't completely miss on earnings. Like whenever we did a write-off for Galileo and they posted like negative 29 cents of EPS, it was crazy. The amount of reports that I saw that said, oh my God, SoFi missed earnings by 150% or something along these lines. Like, it was the worst reporting you could have ever have done. You could have just taken a second to read their actual press release or any tweets from any of the SoFi community to realize that that's not actually what happened, and that they were actually writing down a lot of their, goodwill on Galileo and Technisys. But a lot of people just look at the data aggregators that are just taking the SEC data, and that's sort of the problem there. Now, the people that are looking at that data or are looking through investment screeners and these sort of things, which mainly try to sort companies based on growth rates, margins, market caps, a whole bunch of different indicators that you can sort companies by if you're looking for new investments. There are people that say, hey, you know what? I only like to buy companies in certain sectors. I only like to buy companies that are growing at 30+% rates, 40+% rates, these sort of things. The fact that SoFi might actually crack the milestone of being a 40+% year-over-year growth rate business is an unbelievable milestone. And during that time, I don't know if the algos, if the traders of the world are going to treat SoFi the same way this quarter, knowing that they're going to potentially decimate earnings to such a high degree, right? So I'm very excited. I also think that credit cards are going to ramp this quarter. Home loans, whenever we get home loans, they are almost entirely sold off each and every quarter the second that we get those loans. So what does that translate to immediate earnings? And then what's the execution level on those gain on sale margins for selling those home loans this quarter, knowing that potentially rates will go down into the future, which means people are willing to pay for them more today because they are preparing for the future, right? Markets are forward looking. So I'm actually a little bit more optimistic this quarter that we're not going to fall. I could definitely be wrong. I'm not, I am trying to predict the earnings, but I'm not playing the earnings. So I'm not having any covered calls or anything along these lines through earnings. So I'm holding my shares. I'm going to be a patient man during this time, but overall, I'm very excited to hear what Anthony Noto, Chris Lapointe has to say during the earnings call. Hopefully they show off new products, getting closer to telling us what they are actually going to do with cryptocurrency. During my interview with Devin Ryan today, the number one analyst that's covering Fintech right now, and by far the highest rated analyst that's covering SoFi, said SoFi is going to be all over crypto. Like we talked to Anthony Noto, we talked to Chris Lapointe, they're all over it. Okay. By the way, that whole thing about the $17 price target, hopefully you guys saw that interview. It wasn't true at all. That was their past, price target. And they even said, or when I was talking to Devin, he said, if we are to, re-rate SoFi, which is what we're working on right now, we would rate it much higher because the environment today deserves a much higher premium than it did back in April. And that's only April. It's April to July, and we deserve a much higher price target than where they were before. And I mean, clearly we've seen that. The stock's gone from $12 to $21.30, $21.40. Great interview. Thank you. Hopefully I didn't overhype. Like I said, I was extremely excited about the interview because I spoke the call outs that he said, the generational companies that he's calling out, the $500 price target that he put on Robinhood. I mean, an unbelievable interview from my perspective. But then whenever I said, guys, this was one of the best interviews I've ever done, a lot of people are like, oh, it's going to be Anthony Noto then. So hopefully I didn't lead to over exaggerated excitement, but it was a very, very exciting interview. And anyone can tell by listening to him, he fully understands not only SoFi's business, but Robinhood and Coinbase and all the other companies that we ended up talking about. 10 tech deals was not so okay. Let's be bullish but realistic. Okay. What he said is that there are 10 potential tech deals that are on the table. They said that they were going to win some. They might not win all of them, but they definitely think that they are going to close some of them, and some of them are massive names. Okay. SoFi's past trying to put, and I'm past trying to ask them for press releases on closing new tech deal names. But overall, I'll try to figure out what those names are. I haven't really done any searches lately. It's pretty easy, actually. Well, it's not easy. It's a little bit time consuming, but once you have a list like mine of all the Galileo clients that we ever have, which is past 100 names at this point, you go through some of the older names now, and you can go through their terms of service, and Galileo Technologies will pop up if you go through their terms of service and their card agreements. So you can find the companies that are working with SoFi before they're actually announced. I haven't done that in a very long time. I haven't been like, I don't know. News has been very, very frequent recently, so I have not been that picky lately. But I should do that again, or maybe as a group we can, or something like this. I know you guys won't, but thoughts on Opendoor really quick. Well, I'm bullish on the idea of Opendoor whenever there's any industry. Okay, so let's talk really quick. If we're talking about businesses that I absolutely love, I love companies that can come into an industry that historically has extremely high take rates, an unbelievably large total addressable market, and is so not advanced whenever it comes to technology. So if you can bring a technology player into that space to redefine, what it means to do business in that space while lowering costs, increasing speeds, increasing the convenience for users, then I'm 100% bullish on those businesses. Opendoor, as an idea, falls into all of those cases. It's an unbelievably large market, real estate, okay? The technology and the take rates completely decimate real estate agents, and that might sound bad to some people's careers, but that's honestly how a lot of new markets are created, right? Your margin is my advantage. That's sort of the key there. So Opendoor, though, ever since they lost their founder and they started having new people run the business, to me, it's just felt like a home flipping business. And from what I see, whenever you take a deeper look, is that they tried to make it seem like every single house is a clean and clear cookie cutter fix-up job, right? From the repair teams of Opendoor. And what you actually see from the people that go through those houses that get flipped on Opendoor is that the repair jobs are shoddy at best, and that the whenever markets are really hot, they're overpaying for properties in cash, so then they can have a large inventory. So especially for a company like Opendoor, where margins are not super high, and usually in tech companies, you can find businesses that have 60, 70, 80, 90+% margins. Opendoor has some of the lowest margins because, well, real estate and flipping and fluctuation of markets, it's just an insanely hard business to crack, and one that they've simply not been able to do for the last couple of years. As the real estate market picks up, can they start to get a footholding under that? Maybe. But that founder mentality, that hunger in the business, that sweat equity, I honestly think is gone. So I'm not going to be investing in, and it might be the next Carvana or whatever massive turnaround play. They might do amazing, but I'm not ready to take a small venture bet on Opendoor right now. But I love the idea. Like, I mean, that's right in my alley whenever I think about companies that could work. But it just doesn't happen to be that way. rate cuts would save Open Door. Yeah, but I don't think like technology I don't know. That's been one of the best features of technology companies is that they are a little bit more protected against macro changes and rate changes. The fact that they have to use their own capital and stuff like this to actually acquire the houses and that they're not just some marketplace worries me a little bit more. I'd actually probably be, funnily enough, more bullish on companies like Rocket Companies or whatever it's called now, Rocket Mortgage that turned into Rocket Company and acquired Zillow or these sort of things, just because the margins could be much higher while also benefiting from that technological standpoint in a large market. Steve has made it here. Great to have you, Steve. Okay. One last quick lightning round. Thoughts on Affirm? Affirm is a company that I didn't think was going to be able to work because I don't believe in the market. Not that I don't believe in buy now, pay later. I believe heavily in buy now, pay later. I don't understand what Affirm does that JP Morgan, Wells Fargo, Citigroup, PayPal, SoFi, Robinhood, any single financial institution wouldn't be able to copy. And the real truth is that they're just unbelievable underwriters. Like Affirm has gotten it right in an area that no one's sort of been able to match them at because they just have a ton of user data. They've been doing it very well. Partnering has been their unbelievable benefit. And honestly, they're still founder-led from, if you guys don't follow Fintech enough, the founder of Affirm, his name is Max Levchin, okay? There's a lot of people who get associated with the name of PayPal on its come up, Elon Musk being a founder, the whole PayPal mafia. You can go through the list of every single great founder from Yelp to YouTube to Craft Venture to all of these different businesses. But Max Levchin was the original founder. Numero uno, okay? Max Levchin was the man that made PayPal and then also made Affirm. He is a superstar in the fintech land. I would never, ever bet against Affirm just because Max Levchin runs it. Those are my thoughts on Affirm and Open Door. Buy now, pay later. Isn't that the same as a credit card? It is, except people are signing up for a percentage of interest that they feel willing to pay, and there's no hidden fees, right? So you're not going to end up paying more than you expected, where credit cards, it's much different. Another part that I really like about buy now, pay later, why I think it absolutely works, and why I even use buy now, pay later sometimes, is because sometimes they ask, or sometimes they offer the merchant to pay for that rate, okay? You really want to buy a Peloton? Offer your customers buy now, pay later so they can afford a higher, ticket item, but you pay the interest. Peloton, you pay the interest, or Samsung, you pay the interest. That's where, I have buy now, pay later right now, is that I don't have a card bill or a phone bill with my carrier. I like having an unlocked phone, but whenever it was there on checkout, I was like, okay, well, I could spend $2,000, or I could just pay $50 a month over 2 years at 0% APR. Well, literally, why would I not do that? There's zero downside for me. Samsung's flipping the bill. They're paying for it because I'm buying a $2,000 item from them. So that's sort of the benefit of buy now, pay later, is if the merchant's going to pay. But then you go down the list of like, merchants are extremely sensitive to card fees. You always see like the biggest thing is that Visa and MasterCard and all of these businesses are killing small businesses, taking 2.9% for card fees. Well, if 2.9% and plus 30 cents is killing your business, imagine what Affirm is doing, taking 5.99% plus potentially even more if they're flipping the bill on the interest. Like, I mean, it's a lot, okay? No one is talking about buy now, pay later because it's not big in the world right now. But I think if they do get big, if they do get, large status, that these will be one of the fastest industries where the take rate comes down. Now, obviously, it's a credit product, I'm aware, but yeah. Tanner must be rocking the Samsung Fold. No. Sorry, I'm talking in Canadian dollars. It was like 1,500 or I don't know what the take would be, but yeah, it was a brand new phone whenever they announced it. But it's the Samsung S24 Plus or whatever. No, you don't pay a premium price. That's not true. So the same way that whenever you go into a store and they offer you a discount to try to increase the chance that you're a buyer, it's not that you're somehow paying the rate. It's that they want more sales, that it's worth it for them to discount an item by 10%, by 15%, by 50% if it means that they are going to get more than 2x the buyers. Okay. So the same way with buy now, pay later. If they offer buy now, pay later, it also means that they potentially have a 10%, a 15, a 25% increase in conversion. So it's more of a discount on the margin with increased volume than anything else. The consumer, there's no hidden fees. That's the great thing about buy now, pay later, and why I actually like it. Why I think that it'll stick around is because, like, whenever regulators look at it, they see it as being extremely transparent. Exactly, Nick. Exactly. They'll take less margin for more volume. Raheem says, still kicking myself for selling SoFi at $13.30 and pouring it into HPQ after it melted down post earnings. I made 20% where I could have made 80 to 90% on SoFi. Yeah, I mean, it happens, right? It's hard to stick in a consolidated position over time whenever it's not moving and feel like it's going to move into the future or something like this. But that's what I kept trying to come on every live stream and say is, like, we don't know when SoFi is going to pop, or at least I didn't. I'm not an oracle at this. I'm just looking at the charts and making sure that I don't sell if it's extremely undervalued to where it could be, basing it off comps, basing it off growth rates and other businesses that people are willing to pay for that growth in. So, yeah. You never go broke taking gains. I mean, that's definitely true. That's definitely true. If there were cracks in SoFi's story, I think SoFi has less cracks in its story than Google. Like, Google has real, like, potential loss, right? There's new entrants into the industry that could be, taking away from their total market share. Who is that for SoFi? Like, some people might say Robinhood or something like this. It's like SoFi Invest makes up for none of their income. Like, it's incredible how small all of SoFi Invest is. It makes like $6 million a quarter. Okay. 6 million. SoFi is going to make over 800 million this quarter. So, less than 1% or whatever, You think the browser plays are going to upset Google? No. What I'm not actually stating that Google is in trouble. What I'm stating is that someone could have the case to say that Google is in trouble. That there are players that are coming in, or even, it doesn't even have to be the browser plays. It could just be OpenAI in general, that they're on track to get over 1 billion monthly active users. Okay. Where are those users? Like, there's only 24 hours in a day. It's not like they can equally use Google the same amount and then also add on ChatGPT. So you have to take that time away from somewhere else. That being said, I'm still extremely long Google now because of Gemini and because of everything. But at least there's a case to say that if someone wrote a bear case on Google, I'd already understand why potentially they'd be a little bit worried about that business overall. But for SoFi, what are you worried about? fair value accounting. I've heard all these things about how SoFi is a scam and everything like this, and the way that they do their accounting, no financial institution does, because it's completely a sham. You know what throws away that entire case is them selling their loans and doing the loan platform business. There are customers as large as BlackRock, the largest money managers in the world, that come to SoFi and say, hey, you got more of that good stuff? You know, it clearly is working. They are clearly taking on a product that they understand that the defaults and the upside on those loans is worth it to have more of. Okay. That's as far as you need to look. Once you actually go past that and look at the numbers, fair value accounting is actually a perfectly acceptable business practice. And that a lot of the companies that they actually have backed, the bears of SoFi, saying, short SoFi, go long Lending Club. How do you think Lending Club's been writing all their loans lately? It's all fair value accounting. Like, they have shifted more the way of SoFi because it's working. So anyway. Is ChatGPT the best? Well, I mean, it depends on how you look at it. If you look at the best model in terms of benchmarks for like STEM, like accuracy on tests and everything, then right now I think it's actually Gemini. Even after Grok's big update for Grok 4, it's still Gemini. But the interesting thing about ChatGPT is that people have already been using it, so they have a little bit of long memory with ChatGPT. And then there's also other use cases like images somehow. I don't know. The people at the DALL-E team at ChatGPT, they just get it. There's not another company that's been able to make images that are even remotely as good as ChatGPT still. Even though, Google has sort of gone above and beyond with the video and audio through VO3, which is how you're seeing a lot of these like AI videos. They're almost exclusively from Google Gemini's product. But for some reason, the image products I still don't like as much as ChatGPT. So it just, right now, it is a personal preference thing. But I think the interesting thing about ChatGPT is how they're going to roll it out. Like as the utility increases for artificial intelligence, how many touch points does ChatGPT have? Or do you need to go onto an app or a browser each time to access them? So this is why they're working with like Johnny Ives to try to get a hardware product out. They're trying to potentially buy a browser. They're trying to do all these different things to get their product out there. But is that enough? Okay. Whenever you look at Grok, I mean, you have the app, but you also have X. Is X a really good use case for, artificial intelligence? I would say so. I think that's a pretty good touch point. What does Google have? Well, they probably have the biggest moat. Or, I mean, actually, you know what's funny is the company that actually probably has the largest moat is Apple, and they've just completely dropped the ball. Everyone in North America is on the Apple ecosystem. They would have every single touch point, from your watch to your headphones to your phone to your computer to everything. And they've just dropped. So that's been the biggest upset probably in the Mag 7. And if you look at what was it? Couture Management, the two brothers there that ended up putting together what they called their AI Magnificent 40. Apple's not even on the list. In terms of their top 40 names that they think are going to dominate the world of artificial intelligence between now and 2030, Apple isn't on the list. And it sounds crazy to think of a world where Apple is not one of the biggest stocks, but it's definitely a real possibility. ExxonMobil used to be one of the largest companies in the world. I actually think it was the largest company in the world for a long time. Now it's not even remotely like in the top 20. So things do change. Apple doesn't need to be the big player forever, Nvidia is going to be $1 trillion bigger than them, and they just came about, or not saying Nvidia just came about. They've been around for 30 years, but the massive amount of that acceleration in their market cap has come in the last couple of years. What I like about Google is that Google Workspace, the hardware, the Google Chrome, Google Search, like the amount of touch points, YouTube is insane. And then the amount of personal context that they have on you through all of those use cases is also crazy. I honestly think the only company that can compete was Apple, and they've dropped out. Thoughts about the Coinbase event today? Let's talk about it, ladies and gentlemen. So I have to be honest, I'm a big fan of Brian Armstrong. I'm a big fan of the Coinbase team, but some of their aspirations with crypto go far beyond just, you know, capitalism and trying to make a product that users want. It's a lot about like breaking free of traditional systems, more freedom, more like, I don't know. Some of those ideas get a little bit past me. So they were talking like I'll show you a video on exactly what I mean. Okay. I know all of these ideas sound good. Okay. But let me please show you what I mean before I get attacked here. You guys tell me how this works.
I'm really excited to show you what that actually looks like once you start using it in your everyday life. So for me, it starts the same way that a lot of things in my life start, a group chat. Because messaging is just the most familiar thing on our phones. We use it every day to talk about our...
Okay, first off, because they didn't intro this in any other way, Coinbase is not trying to be just a brokerage, okay? Cryptocurrency, they want to bring everything on chain. So this is messaging, this is trading, this is, you know, social media, this is essentially everything. Okay, it's the everything app, but all on chain. So security is high, usability is high, but that also leads to weird aspects like what she's about to talk about. And they talk about it as a plus, but I could see how there's so many negatives to this. And oh my gosh, Dookie Pie just gifted 20 more memberships. This is insane. Dookie, thank you so much. I don't know. I hate that you make me say Dookie Pie every time you donate, but thank you so much. I do appreciate the donation. That's very sweet of you. Where's my membership? Raheem, pay for it yourself, okay? You got to get lucky in the draw. All right. Let's watch this video, though.
Plans, send funny photos, check in on people, and just share what we love. So with On-Chain Summer coming up, I connected Coop and Jake in a chat. They're both here today, and they're both incredible builders that are both passionate about helping creators and artists earn on-chain. And what's really exciting is that these chats are way more powerful with Base. You're not just talking, but you can actually do things. So I wanted to support a few artists that Coop just onboarded here in LA, and maybe even earn a little bit for backing those musicians before they blew up. So I asked an agent named Banker to buy their coins all in one line. And as you can see, it's not really a group chat, it's kind of like a group chat with superpowers. And this is what makes the Base app different. It's multiplayer by default, which means that everything can happen alongside others, whether it's posting, trading, chatting, and co-creating.
Dookie Pie, chill. Holy crap. Another 20 gifted subs. This is not the same from the last one. This is a different. Holy crap. Thank you so much. Essentially, for anyone that does get a membership, it's a way for people to not only stand out in the comment section, but also to get access to the private videos that are for our SoFi After Hours show. We do one of those per week. Hopefully, I'll try to add a little bit more to that as well. What's going on? That's a third one. Dookie, relax. 60 new members just got a month of membership, future investing membership. Thank you so much. Some people are getting it now. Holy. Yeah, you get little new emojis now too. I don't know. I got to figure out a way, especially with Dookie now making the membership so freaking popular that, you know, it, but dude, is this real money? Like, are you going to charge back somehow? Guys, what is going on? What is this? We're not trying to turn the whole chat green. Okay, I'm going to have to make more content for members or something because this is ridiculous. We just got 100 new members. I think that's also the most that you can gift is 20 at a time. That's 120 members. What the heck? 120 members in from the time of 9:07 to 9:11 p.m. I think Dookie's making a ton of money doing what she does in Norway, which ALX Alex M645 with the 20 gifted subs. Willy Wonka with the 50 Every single person in chat is about to be a member of the chat. Dookie Pie gifted 20 more gifted subs. What the heck is... How many is that? 20, 40, 60, 80, 120, 140, 160, 210 new gifted members. I think that was more than what I had before this stream. I think we just more than doubled. Thank you all so much. Willy Wonka, I really do appreciate it. Holy crap, guys. That's not what do you want me to do? And Doogie Pie, she's not saying anything. She's letting the gifted subs be the message. What is going on? It's not my birthday. What did I do? Thank you. You know what? I literally feel bad for the people that don't have memberships. I don't know. If somehow you didn't get a membership during that, take off the glasses. Holy crap. That's Doogie Pie, Willy Wonka, ALX. Thank you all. I do appreciate it. Can we get back to the video? Is this real money? Is there like a chargeback scheme that's going to happen or something? Doogie, thank you. What do you need? Nicole, also appreciated. Thank you so much. What are you asking from me, Dookie? Is it SBet gains? It might be SBet gains. By the way, whoever actually got me SBet, I'll have to check the thing, but the donations usually go. Okay, I'm done for now. Dookie, what do you want me to put that $100 towards? By the way, I think you wanted Accelera before. I'll purchase some stock with that as well. But how to receive membership? I think it just happens. I don't know if you have to turn on to be allowed to get a membership. I'm not sure. But yeah, Steve says AUR, buy it. Aurora Innovation. Is this like Aurora, the cannabis company? Because I used to have this business then before. Market cap 10 billion. Yeah, we can definitely put Aurora in the fund, but the chat's going a little too fast. What did Dookie say for the position that at least I hope she did? SBet. Okay. Game on. Perfect. Okay. Should I put like $1,000 into SBet? Like, I don't know how many memberships that you just put in, but like, I think maybe like, or is that just going to throw off the fund too much? We're just going to be like an SBet fund, which, I mean, the way that it's gone, That is by far the fastest company that has accelerated in the portfolio, by the way. I think like it's been like a couple days. We're up like 130%. It's insane. Freddie says SoFi. It's not up to you, Freddie. It's up to Dookie Pie. She owns me now. I belong to her. But let's wait to see SBET. Dookie, I'll literally let you decide. You can hold the fate of the fund. Do we put $1,000 into SBET or do we only put 100? I'm fine with either decision. Tanner's a kept man. Yeah. Doogie, I know. How much? 1,000? Okay, I'll do it. I'll do it. Let's see if... do you want me to put the order in right now? Sorry, guys, about the distraction here. Can I order it right now? Yeah, be a good boy. All right. Sorry, just putting some money into the community portfolio right now. I wasn't expecting an additional $1,010 order. Okay. All right. SBET. All right. To those that want to see me do this. Oh, I can only buy okay. Okay, I'm buying 27 shares of SBET for $1,003 USD. We're just going to buy it right in overnight markets. There we go. All right. The community fund has now become an SBET fund. I'll update the Savvy Trader here in a second. I'm so sorry, Coinbase. We got a little derailed. That was the most insane membership thing I've ever seen happen. But let's go ahead and, sorry, Coinbase. Let's just quickly show what the distribution looks like. Right now, SBET makes up, it's actually our third biggest position. So this cash pile is about to drop pretty quickly. And it's all going to go into SBET, which was up 29% today. But total in our portfolio, since we've only started this back in July 8th, I don't remember when the last time we bought it, but it's already up 123%. 123%. So SBET's going to fly right to the top. Okay. Do we get back to the news? I don't give a flying Mercado about what anyone thinks. Mercado Libre, ladies and gentlemen. Mercado Libre trying to pump his Mercado Libre shares. And I don't blame him. He's been on quite the train recently, every single day popping in to do exactly that. I just bought $1,000 of SBET. All right. Let's get back to Coinbase. Should we rewind it a little bit? Essentially, to those that weren't watching, they are building an all-in-one platform on-chain where you can do a bunch of things, okay? Let's just rewind just a little bit whenever they start this conversation.
exciting is that these chats are way more powerful with Base. You're not just talking, but you can actually do things. So I wanted to support a few artists that Coop just onboarded here in LA, and maybe even earn a little bit for backing those musicians before they blew up. So I asked an agent named Banker to buy their coins all in one line. And as you can see, it's not really a group chat, it's kind of like a group chat with superpowers. And this is what makes the Base app different. It's multiplayer by default, which means that everything can happen alongside others, whether it's posting, trading, chatting, and co-creating. Especially, I love the excitement. Keep it coming. Especially for creators, this unlocks so much. So earlier this year, I shared this photo. Earlier this week, actually, I shared this photo, and it's from 2 years ago. You'll see some familiar faces like Jesse and Wilson. We were in the woods of Idlewild working late the night before we launched Base. And that just felt like the perfect throwback to celebrate a new day one. So with just one tap, I made my post a collectible coin that anyone could buy and support.
Okay, so to understand this, you have to understand cryptocurrency to some degree, okay? But whenever things go on-chain, you can also allow things to be purchased and supported. But the only problem with this is, why would anyone purchase or buy and support someone's Instagram post or image? Okay, let's continue for a second.
On most platforms, you can't really earn unless you have a massive following, or you land a brand deal, or you just happen to live in the right country where you're eligible for earnings. But on Base, you can make your post viable, because as all creators know, our content has value. So if someone buys your post, you earn. And if it goes viral, both you and your fans, everyone who participated in that and who bought into that, earn from that upside. And it didn't take long for me to get this notification right here. This is the moment that we want everyone to experience, not just likes and views, but real earning and real upside. And the really cool thing is, I didn't just earn from people buying on the Base app. Most of the buys actually happen from other apps, because this coin is available on open markets. So earning from your creativity isn't new, but doing it this easily and on your own terms feels different.
Let me stop it right there. I like the idea and the sentiment behind, hey, let's not have everything ran by advertisements, and because whenever you have an advertisement and everything like this, you are paying to the platform to some degree. And most times there is a middleman in that period, whether that's Meta or X or YouTube or whatever, that actually is taking a much higher cut than if you were to have paid the creator directly. However, human psychology says that if you can get something for free, why would you pay $2 here and $2 there to see every single post and ownership of an Instagram? Like, it just gets a little crazy to me. I don't think that this is going to take off in any form or realm of popularity, because Instagram is a much easier thing to use. Facebook, like, I don't know. I don't get it at all. I enjoy on-chain principles. Like I think that there's a lot of things that are very exciting that are being built on chain, but there's a big thing behind that is funding, remove the middleman. Let's do everything peer-to-peer. But I actually don't know if that works very well. There was a very cool thing that they did make that I 100% support, which is just the idea that Base, this app that they're also making, which can hold cryptocurrency, why don't we make an easy application to make payments? You can pay using apps right now, like Coinbase wallet and these sort of things. Now it's going to be called Base. If anyone has it in their phone and you're fully updated on your phone, you should see today, you no longer have something that's called Coinbase wallet. It is already called Base. The icon and everything has changed. So this is immediate updates. But Base Pay, this is a very real innovation. I think that this is awesome. It's perfectly built into Shopify already. You get 1% cash back for using it. The money that's stored in that account is at a 4.1% APY on your USDC. A little complicated, I understand. This is not a crypto channel, but just understand that there is real benefit here. there's a lot more work to bring it more mainstream, but more of these types of updates, I think, bring it more mainstream closer than ever. Essentially, USDC, which is the stable coin, the largest stable coin. If you guys know the stock Circle, that's what their product is USD Circle. Okay. On this app, essentially makes an Apple Pay, a Google Pay, or any version of that. This is Base Pay, which is the USD version of Apple Pay. You're already in 1 million stores. Sorry about the little bit of epilepsy warning there. But essentially, one-click payout on Base Pay. You're already in 1 million stores because it is Shopify. Shopify, the CEO, Toby Luckey, is also on the board of directors at Coinbase. So there's a lot of crossover between these two businesses. And just like you would Apple Pay, you have a certain amount of money. It's going towards a product. No hidden fees. Absolutely free, by the way. So that's very interesting on what Base is trying to do. Brian Armstrong, talk about the whole your margin is my opportunity. 0% take on payments. So they actually lose a little bit on payments. It's an extremely small amount. They actually just times the speed on Base by 10x during this announcement. So instead of 2 seconds to transact, now it's 200 milliseconds or something. I don't know. They made some change. But yeah, it is coming into view. There's a lot of real use cases here, a lot more to go. And I don't think the full, what they believe is going to happen in terms of a social media network, all this stuff, I think that is legitimately worth 0 for Coinbase. Is everyone a member now? I mean, there is a lot more members now than ever. Shout out to Willy Wonka as well. He donated 71 gifted subs. ALX donated 20. Nicole donated 1. Dookie Pie donated 140. Unbelievable. Not everyone. I'm actually surprised with the amount of non-green names that I'm seeing versus how many people signed up. So what I am curious about is if you have to enable it or something. I'm not sure. I think I remember there being some sort of setting or something, whenever you go into the member settings, that it says allow to be gifted a membership or something along these lines. I'm not sure. It never picks me in a Mits chat either. Well, then maybe it is a setting that, Michelle, maybe you haven't seen yet. Payush has it. Carl has it. Aaron has it. Wow. Thanks, guys. Thank you so much. Okay. On top of that, let's quickly talk about upgrades in stock prices. So, like I said, if you guys haven't seen the interview, I just spoke with Devin Ryan, one of the best interviews I've ever done. I think, honestly, one of the most important interviews that you'll watch in fintech, not because of anything that I contributed. I actually think I spoke too much. And everything that he was saying was actually gold. Now, funnily enough, he is bullish on SoFi, but probably his most exciting name that he covers is Robinhood. And by the way, he's one of the top analysts on Wall Street right now because he got Robinhood right, he got Coinbase right, he got Dave right. He got so many names, including SoFi, so many names right that had, 10x movements. So you see here on Robinhood, which actually says, sort of a downside on this company. Once you actually look at the top analysts, they actually place it higher. But hold on a sec. Highest price target is 125. That actually is from Devin Ryan. Devin Ryan changed his price target from $70 to $100 to $125. Okay. Then other analysts also went from 70 to 110, 43 to 110. The new analysts 57 to 102, 50 to 100, 91 to 104. It is a flurry of upgrades. Let's check SoFi really quickly. I don't think we've seen any new upgrades. Will Nance put a new price target on SoFi of $19 per share the other day. Yeah, it is more of a mixed bag for SoFi, but overall, the prices continue to rise. And that same sort of sentiment where the top analysts, the ones that rank really high, are actually giving a much higher price on SoFi versus the rest of the people, which honestly probably made them top analysts. And what I mean is that the people who do say that SoFi is $6, is $4, whatever, or Timothy Switzer, I think, went from 6 to 13 or something like this. They have continuously gotten burnt, which has actually hurt their ratings, and why they're not called top analysts is because they've gotten some of these names so wrong. My gifted memberships was turned off. Didn't even know it was there. Yeah, maybe this is a thing, is that there is gifted memberships that are a setting that needs to be turned on and off. So double check if that is a thing for next time. People do gift memberships from time to time. I don't think we'll ever see anything like that again. I'll send $1,000 if you take off your shirt and flex for the chat. Dookie, I do appreciate it, but I'm okay. I have a thing that I do want to do eventually, where I do show off a fitness goal or create a fitness channel eventually. But I also want that to be something that I build up towards. I so unbelievably appreciate the donations, but I'm not a stripper either. I'm not going to be sold like that, but thank you so much. People are offering me $1,000 to take my shirt off. Okay. SoFi Tech and Noto we trust for the community fund. Absolutely, Payush. We'll get another share of SoFi. SoFi needs to battle its way back because SBET is going to be by far in the lead. And if we see like another 100% increase in that company, like, guys, we really are. I'd probably take my shirt off for $10,000, but don't start donating here. I'm not doing that. Actually, you know what? No, because if I start seeing, at some point, it's just fiscally irresponsible for me not to remove this shirt. That's too funny. You can't take it back? Yeah, but Google takes a large percentage. I don't need to give like Google a couple $1,000s, you know? Yeah, OnlyFans on YouTube. Yeah, at what point does my... Yeah, little teaser bills. How did I get this job? How is this something that people do online? Future strip vesting? Yeah. That, honestly? Strip tans? Or sorry, only tans? That's funny. Strip tans. Quintessa, you missed the show. Holy. We named our new cat after you, Tanner. Thank you. Okay. Doogie, chill. Honestly, relax. Can I get through some, actual financial content here? I'm being teased. I'm being, My body is being sold on the internet right now. Or it's not even. I haven't done a thing. I've just been sitting here. But speaking of which, let's talk about the depravity of, is that how you say it? Depravity of the internet really quick, which this is actually a great segue. I actually asked Dookie Pie to set this up for me. What the heck is going on with XAI right now? XAI has posted a job listing for a waifu engineer with a salary up to $440,000 a year. Now, a waifu, to my understanding, is like a Japanese term for girlfriend or something like this. I don't know. But essentially, they are making animated characters that work alongside the LLMs that are actually speaking. One, we all knew that this was going to come out eventually by some player. I think there's already these in the App Store, stuff like this, where they take, ChatGPT APIs and then make them sort of companions. The fact that it's launched directly from Grok is so unhinged, in my opinion. I think it's ridiculous. But the fact that they are going further into this, I really like, I don't know. I'm not a super believer in this for society. Yeah. The internet has caused a lot of like you've heard sayings like the anxious generation, the rates of depression that are rising, all of these things, these antisocial generations, especially through COVID. I don't see how this doesn't make the ultra form of antisocial, like, this scares me for the future generations. We all know it's coming. I mean, this will happen. But AI girlfriends, crazy. I've also seen online what's really funny is like you see people how culture has changed, and what was not allowed or socially acceptable before is now completely allowed. Is that like we are going to be the old generation that's like, oh my God, you can't have an AI girlfriend, and we are going to get scolded for being insensitive and bigoted for calling out people that have AI girlfriends or something like this. But I don't know. Membership check. Yeah, sorry. Sorry, brother. But this does scare me a little bit. AI was a lot more fun whenever it was helping write emails and stuff. I don't know. I'm definitely not on that train yet. Maybe I'll change. Maybe I won't be so robophobic in the future. But I'm not robophobic. Like, I mean, if two AIs want to be together, that's their business. No, I just think that this does cause probably some mental health problems later on in life, is that if you don't learn how to speak to other humans. All right. Sam Altman had some great things to say today. Agree with a lot of what Jensen has been saying about AI and jobs. There's a ton of stuff to do in the world. People will, one, do a lot more than they could before. Ability and expectation will both go up. Two, still care very much about other people and what they do. I sure hope so. I sure hope so. Three, still be very driven by creating and being useful to others. Hope so. For sure, jobs will be very different, and maybe the jobs of the future will look like playing games to us today while still being very meaningful to those of the future. People of the past might say that about us. Anyway, betting against humans' ability to want more stuff, find new ways to play status games, abilities to find new methods for creative expression, etc., is always a bad bet. Maybe human money and machine money will be totally different things. Who knows? But we have a lot of main character energy. More to come. I think that this is a great saying from Sam Altman. I think it calms some fears of people that do worry that all of capitalism is going down the drain because AI is coming, or that humans won't interact with each other more often. I mean, more steps towards waifu girlfriends does step away from human interaction, but maybe it is a mixture of both, right? I'm a robot. It does feel like it. Like, no, you know what? I actually don't think. Take your time. Guys, I don't know where this started. That why don't you guys ask Amit to take his time? What is this about me? I think because I've made some health statements before that, like, I don't know. You know what I had for dinner today? Pizza. Okay. It was a nice cheat day, actually. I haven't had pizza in a long time, but it just goes to show you, like, let's relax. Okay. He probably is too, Harry. 24-hour live stream. This is not even a lot. We've been live for 1 hour. Is this a stripping for stocks podcast? Yeah, I mean, what's the ticker symbol? Is it Rick? I think that's the strip club. You know what? I just tried. I swear, I just went to type in Rick on Weeble, and I typed in Shift 4. Or, well, like ticker symbol FOUR. I swear that just happened. I don't know how that happened, but RCI Hospitality. Yeah, that's always funny. Hospitality. Club and restaurant sales are down. Isn't that a bad thing, right? Is that like the whole idea that Stephen Fiorillo had is that Rick was a great like benchmark for understanding if like people have a ton of discretionary income, because people are only going to those types of places if they have like money to burn. You sort of look like a Rick, and then is donating me these dollar bills. I'm not a stripper, ladies and gentlemen. Do you have strip clubs in Canada? I think you guys actually think Canada is like a different place. Like whenever I go down to the States, it feels like Canada. It's the exact same. I mean, there's more guns in Walmart and stuff like that. Like there's different stuff in terms of that. The food's a little bit more abundant, maybe. But overall, it's the same. They speak French. Yeah. Yeah, I don't speak French, though. So not everyone speaks French, but it is the second language here. No bagged milk in America. So yes, we do have bagged milk, but I don't even buy bagged milk. Like my milk comes in a carton. I think that's also how you guys get your milk. Who drinks milk? I mean, I drink milk. I don't know. I'm lactose intolerant. Let's talk some stocks. All right. We've gone overboard here. This is ridiculous. I am lactose intolerant. I get lactose-free milk. But anyway. OpenAI says it's using Google Cloud for ChatGPT AI assistant products now. So this whole thing about, are they using Google? Are they not tapping Google? Who knows? Either way, Google's a large purchaser of NVIDIA. I don't think it's necessarily negative news for NVIDIA. They could be tapping a cloud without necessarily needing the TPUs specifically. But yeah, further good news for Google. I think it's further good news for OpenAI. I hope, man, that OpenAI comes public sometime in the near future. 2026. I mean, I hope, I don't think that they will be able to be like able to raise enough capital without going public. So I do hope that they do that sometime into the future. It would add a lot of credibility. I just wonder if they're waiting because they are planning on burning like $20 billion for the next 2 years. And that news is not like incredibly public. Obviously, around markets, especially private markets where people are actually looking to get allocation into OpenAI, that is pretty public information. But in terms of like what Sam Altman is coming out and saying, I don't think he's ever really said that publicly. So they do have a massive burn. Companies do try to like, go public whenever things are going well, at least. But yeah. Lactose free tastes the same. Yeah, it just has, my understanding is that it just has lactase in it, I think, which offsets the lactose. And lactase, to my understanding, is like it essentially just tastes sweet because it is. Are you speaking to me in a different language? You make a headband that says, I heart Dookie Pie. Where am I supposed to do that? I'll see what I can do. We'll do an episode specifically for Dookie Pie that officially owns me. Right now, I can't do it right now. No. We got a live stream. Hey, we have a live stream to continue to run. Tanner, I used Coinbase for the first time and was surprised to see $2.99 CAD flat fees on buying crypto. Yeah, I mean, Coinbase, especially for smaller purchases on Coinbase, is very, very expensive. It does get a lot cheaper once you start dealing in like millions of dollars of crypto. That's why, all the largest institutions, the government, everyone uses Coinbase. But in terms of the low brand new users to Coinbase, they charge a lot. They do. It's not always the best monetary decision to choose Coinbase right off the bat. But yeah. Tanner is now OF influencer. Is there an OnlyFans financial influence? I must be the first. I'm not on OnlyFans, by the way. I won't even take my shirt off. It's the last app that you're going to catch me on. RBC charges $10 US per trade. Please bring Hood to Canada. Ryan, I mean, you do have better options right now. Quest Trade, Wealth Simple, they're both commission free. So you could get better options than that already today. But yes, Hood definitely should come to Canada. The more options, the better. And they did just acquire WonderFi. So that will change the game. They'll be here. I was gifted a membership before it became cool. Is Wealth Simple the best in Canada? I definitely like them. I was actually just looking at something. If you guys can see my collection here in the back, that's a Wealth Simple card, one of the originals that they had, another card there and another card there. And that doesn't include the one in my wallet. So I've been a long time advocate for Wealthsimple, so I'm a little bit jaded to some degree, but they do offer an amazing platform for Canadians. If Robinhood was to come here, like, would I take Wealthsimple in Canada versus what Robinhood is in the States? Robinhood every day. 3% on the credit card's better than 2% what I'm getting with them. You know, the cheap costs of trading options on Robinhood is definitely better than what I'm paying here. But I only have as good of an option as what I can get. What do I use for trading? It's a mix of Wealthsimple and TD, like the Waterhouse account, web broker. Yeah, we have Weeble and Moomoo as well. I tried out Moomoo for a bit, but ended up switching back after a little bit just because I know the platform so well. Even though Weeble I still used to use, Moomoo and Weeble I use as ways to look up stocks during the day, though. Why keep my money in the bank if there's Robinhood Gold? True. They'll pay you a nice percentage, which actually SoFi just matched. You can get 4% APY on SoFi right now with your money there. You got the Wealthsimple credit card? Yeah, I did. I was in the beta, actually. So I've had it for a long time. We're sort of having a Canadian version of the Robinhood card thing where it's not coming out as fast as people want, and there's a massive wait list, and people are, waiting on that. So, yeah. Also, ladies and gentlemen, like, let's talk really quickly about Christmas giving. We spoke about friggin' Joby the other day on how amazing of a stock purchase this was that I told oh wait, no, that's not a good way to look at it. Hold on. 4% at SoFi. How? I think it's new member benefits right now. You get 4% for the first 6 months or something. Here, we can go to their website and check, but let's quickly just take a look at Joby, because this is what I actually gifted Tevis for Christmas. We do a little giveaway there, and it's now up 100%, 98% year to date. At one point, we were down like 35%. So if you were to have actually purchased during this dip up until now, you guys are sitting extremely, extremely pretty. Christmas in July next week, bro. No. Back on Christmas, I had gifted Tevis, shares of Joby. That's what we do. We exchange tickers. He didn't end up buying it, which broke the rules of the game, shattered the reputation of the fun game of Christmas. But it's up 100%. So, I don't feel too bad. I got 3.8 with SoFi and direct deposit. Yeah, but if you go into SoFi.com, hold on a second, because this is a thing. And to be fair, if you are a bear for SoFi, you would actually say that this is bad. Okay. That they need to boost it to 4% in order to attract users onto the platform. Because the way that they look at it is that deposits are actually liabilities. Okay. We know that they're not, in terms of, like, SoFi wants deposits, but they actually are liabilities. They're required to pay out 4%. They don't make 4%. They have to pay out 4% for all the deposits that come into this, platform. But, plus get 1% IRA contributions and rollovers. 0.25% rate discount on private student loans. That one is not as bad because that's actually a discount. They're not paying out anything. They're just discounting the rate at which you could end up getting one of their products. So the original price was arbitrary to begin with. But the payout difference between 3.8% and 4% might show a level of weakness that they needed to boost it in order to attract new members. That probably isn't what it is. It might also be that they're doing that because they know that they have such high demand on the loan platform business that they're trying to attract users at all costs so then they can further loan demand. Like it might just be as simple as that. Doogie with the $2, can you do a Kermit the Frog voice? No, I cannot. No more of these silly... I wouldn't even take my shirt off for $1,000. I'm not going to do a Kermit the Frog voice for $2. Come on now. It's to increase the flywheel. Yeah, but if that was the case, why not hold it to 4% before? I mean, they had said that they didn't need to offer that, and they could actually bring it down to 3.8%, squeeze out that additional, contribution margin, and still see a high reward. So the fact that they're boosting it up afterwards, and we're actually expecting rate cuts into the future, you could argue that that does show signs of weakness, but that doesn't necessarily mean that that's what it is. I got 4.1% with Webull Premium. Yeah, but most times whenever it is that high, you have to look at it as a mix of, is that just them being generous? Are companies generous usually? Or do they need to do that to attract trust or people willing to put a little bit in to trust them in order to receive a higher benefit? That's why JP Morgan doesn't have to offer anything. They offer 0% because the trust is there because their users have been with them for 40 years. Like there are people that have had a bank account with JP Morgan for 40 years, have never moved, won't move because they know that the service there they can trust, and that whenever they go to an ATM or whenever they tap their card, it works every time. Now, you would expect that they would also think a similar thought from SoFi, but not everyone is easily of building up a level of trust after having a seamless product for 40 years, even though they could get a bigger benefit. But that's why you offer higher and higher rewards to try to, incentivize a switch. Yo, can I get a coupon for your growth investing masterclass by any chance? Willy Wonka, you've bought it many times over, I assume. DM me on X or something like this. I don't actually have any discount codes. Like the price is the price, but Willy Wonka is literally one of the largest supporters of the channel that we've ever had. So yeah. Condensation on the cup, eh? I wasn't just I don't know if anyone saw that dripping. It wasn't coming like I'm just a terrible drinker. It's just a lot of condensation on the cup. It's ice. All right. I made Tanner buy it, Rob, so he needs to learn what stock? Big Bear? It's not water, it's Celsius. So congratulations to the Celsius holders. I just have it in the mug so I can put in some ice. I'm aware it's 10 p.m., by the way. Okay. Any other pieces of news that we didn't end up talking about? Maybe we can talk a little bit about the Devin Ryan interview. I think that's important. Devin Ryan, by the way, put a price target over the next decade for Robinhood is probably the biggest thing he said during the interview. There were a couple good moments, but this was one of them for sure. That Robinhood is a $500 stock. $500. He wrote in his report that it was a $400+ stock. He did not say 500. In that interview, he did. Okay. A decade from now. Unbelievable. That is a fantastic return from 100. Guys, I bought this company at 16 and I've DCA'd a lot on the way up, but like my average is low. Okay. Exciting times for those that did listen and did get excited about that name as we were building conviction all the way up until today. I mean, this could be the largest total percentage stock that I've ever purchased in my life if I hold it for the next 10 years. And he's right. Have I tried Alani? Yes, I have. Yeah. And what's so funny is that my girlfriend loves following a lot of these influencers online, especially ones that are into like different fitness products and stuff, and that they oftentimes are sponsored or affiliated with Alani. And so every time they have a new product out, she wants to go to Costco or something to go check it, or a convenience store or whatever. Like the brand that they've created that attracts people to that is quite interesting. So yeah. Do I agree with his price target and analysis? I think that there's few analysts that I agree with completely. And I definitely don't agree with Devin Ryan completely. Okay. But his understanding of fintech was better than I think I've spoken to with anyone else. And I don't agree with some of his EPS targets, and even like his Q2 EPS for SoFi seemed pretty low, 6 cents. I think he had like 106 million of revenue. I think that's low. So there are things that I disagree with, but that's being nitpicky. And in fact, anytime that I wanted to have a conversation about the dollar amounts or the percentages of revenue or the margins or something, he kind of called me out for being nitpicky. He's very much an ideas kind of guy. And this is why he's a big believer in Robinhood and Coinbase and these sort of names, is because they are one of one businesses. So I want a membership. Jeff, you can get one. So yes, I do agree with the price target specifically of Robinhood about 500. I mean, even probably to some degree that might even be conservative, right? Especially whenever you're going a decade out, you don't know what Robinhood is planning on doing between these two periods. Another thing that he ended up saying, which I thought was amazing, okay, and I've only really thought about this for companies like Nubank. I think about it for Robinhood, but only past tense, not future tense, which is essentially that if you were to look at the amount of retail options trading before and after Robinhood was a thing for options, that the rates have changed, the percentage of how many people trade options in retail investors like me and you. That is because the tools that Robinhood made were so intuitive, so cheap, so quick that it incentivized users to use it more often. Nubank, same thing. In their field, credit cards back before, you would see like very, very low market penetration, and that the total addressable market for them was like, oh, okay, maybe they could get 15 million credit cards. But somehow today they have 40 million plus credit cards. So where did that come from? Well, most of the credit cards that Nubank has had to have given out were first-time credit cards, people that were not in the market before. So what he kept highlighting is that where the biggest opportunity for Robinhood and Coinbase and these types of companies is actually in areas that markets and market surveys and total addressable markets just simply don't exist right now, right? That I think is super exciting. I also think that for SoFi, like whenever this is what I think analysts get wrong so much is that whenever they look at the total size of personal loans, they go, hey, SoFi is doing $20 billion of personal loans, and the total outstanding size of the entire personal loan market might be anywhere between 160 to $200 billion. So they're like past 10% of the entire market. Like this can't continue to grow. There's only so much percentage of that box that is in their credit box. And then you also have to factor in all the other banks and fintechs that they're competing against. They make up too big of a market share to continue this growth rate, right? That is a big bear case for SoFi. But the real truth is that the market cap or the market share, the total market for personal loans is not 160 or $200 billion. It's like 1.7 trillion, because that's the rate, or that's the amount of credit cards that need consolidating, which is what SoFi is really going after. So in that credit box that SoFi can go after is not $100 billion. It's probably closer to like $700 billion. And that's just in the States, by the way. So anytime I hear bears bring up the fact that like, SoFi is going to completely slow down because they're just going to keep banging their head against the wall to do the exact same business model that they've done forever. It's like, why does that need to be the case? You don't think that the company that's been so agile to change their business each and every time that something happens, like tech platform changes, student loan moratorium changes, all of these things, you don't think that they're going to be able to adjust their business to the changing trends in the market? I just think it's crazy. Of course, they're going to start going after international loans, lower credit boxes, more home loans, other areas that expand their addressable market. Like, come on, just think for a second. I think that's also why bears get it so wrong. Is like they have this belief that humans have zero ability to solve problems, that they see a problem ahead and they say, hey, whenever this company that's been doing X, Y, or like 1 + 2 no, that's not a good example, but they've been doing an equation that gets out an answer. You don't think that whenever they hit that brick wall eventually that they're going to change their strategy. I think that's dumb. But ladies and gentlemen, this has been an exciting stream. Thank you to Dookie Pie for all the donations, memberships, everything like this. Thank you to Willy Wonka. Thank you to ALX. I don't know if I should just call it Alex, whatever. Appreciate everyone that came to watch the stream, supported the channel. Onwards and upwards with these stocks. I mean, we are at full force in a bull market. Stable coins, artificial intelligence, rate cuts. We have unlimited tailwinds right now. It's seeming like the market could continue to pump higher. I see it. Seems like the rest of the market can see it. So I'm staying fully invested. Thank you all so much for watching. Really do appreciate your time. But bye for now.